Torn from Natalie Imbruglia. Magic, 8:36 our time. Boy, that sunshine's gorgeous. And then you combine that with the sunrise we had this morning. Those of you driving early had beautiful colors above you and all around you. And Mike Barrett with us. We told you good policies, Mike. How's the colors in your neck of the woods?
Colors are looking pretty darn good in Waterford. The other day I was driving around Stiles Pond, and it was a really, really calm day. Stiles Pond water was as still as it could ever be. It looked like a mirror.
Oh, wow.
It was awesome. My son and I just stopped and took a look and enjoyed it. And where do you think? You think peak with the ebbs and flows in the temp? Do you think we'll be at peak this weekend?
Well, Mark Breen was saying that at higher elevations, today, tomorrow will be peak.
Okay.
But he also said that the colors are changing seemingly a lot faster this year.
Yeah, a little bit of a drought that probably spearheaded that. And
not as bright red either, but still beautiful.
I have no complaints. Well, the only complaint I'll have is when those darn things are on the ground.
They are in my driveway.
I'll be complaining.
All right, let's go back to good policies where we talk about the world of insurance. You shared a term with me that, like many of our listeners, I don't have a clue what it is. A hard market. What in the world is that?
Yeah, insurance has approached what we're calling a hard market, and there's really two market descriptions that you can use in a general sense for the world of insurance: soft market.
I was going to say, let me guess.
Or hard market. Soft market, companies are hungry. They're looking to write. The rates are amazing. Everything's great. Everything's awesome. The credits are abound, and it's just fantastic. And now, due to the number of claims, especially with people seemingly having forgotten how to drive during COVID, hitting the road again, a lot of accidents. But then and that's a big thing, right? But the losses are more severe because of the hardship on the shortness of supplies, the supply chain squeeze. The cost of material certainly has gone up, labor and everything else. So all this is snowballed into this scenario where insurance is just the claims payouts are crazy. And when that happens, as well as when there's even a hint of a recession, which we haven't seen anything like a hard market in a really long time, probably since I've been in the industry, what happens is companies start tightening the belt a little bit. Rates are possibly going to start going up a little more. Inflation guard on homes certainly going to be boosting higher to make sure your house has coverage.
Does this mean that they're not going to be competing as much with other companies to have a better rate?
I think there's always going to be a level of competition. I just think the aggressiveness of it may be having the brakes pumped a little bit right now. But here's the thing. Can you still save money? Absolutely. If it's been a long time since you've shopped your insurance around and you start noticing that your prices are really creeping up, maybe now's the time. I will tell you personally, I'll start with myself, right? I'm in this industry and I'm personally been insured with the same company for my home and auto and umbrella for 13 years. And I'm comfortable with it, all right? And yes, I look at the rates, I'm like, I could shop, but I like who I'm with. And I think that's the one thing that gets lost, right? If you like who you're with, stay with them, right? If you're paying too much, certainly look at options to offset and decrease your expense. But if you like who you're with, don't just start shopping for price, especially if you've had claims experience with this particular company. Nothing wrong with staying the course.
Well, when you say stay with who you are with, you can get better rates by having the conversation with your current insurer.
Absolutely.
The only way to save money isn't to go from XYZ to ZXZ.
I'm so glad you brought that up. That's a very good point, Jeff. And that's one I was going to get to, and you just hit the nail on the head for me, so it's a great lead-in. There are times where if you shop your insurance with the exact same company you are with, you may realize some nice savings. It's certainly something worth looking into. So that's why I wanted to say, if you're happy with who you're with, yes, I've changed policies, but with the same company. So it's one of those things where you might find a great savings, or you might open up the can of worms that make you realize, oh my gosh, I was eligible for all these credits that weren't available on my previous policy, but now they are. So a lot of great things there. But let me give you some quick high-level tips and tricks if you're shopping for your insurance.
Top shelf. Here we go.
All right. Keep the bottom of the barrel thing that you're looking for as price. Have that be the end result. Don't have that be the starting point, because that's what's going to get you into trouble, right? So get your policy out and in front of you. Always. Understand the coverage that you have. What are your limits of coverage for your home? What are your deductibles on your home? What endorsements, special endorsements? Maybe you have a jewelry endorsement. Maybe you have a large detached structure that's boosted coverage. There's so many variables here. In the long gone are the days where people would not want to provide their policies to whoever's shopping their insurance for fear that they may not be as competitive because they see the price they're up against. That's not the case. It's never been the case, but certainly not the case. So the best thing you can do is either have that in front of you while you're talking and shopping, or provide it to the person that you're talking to shop your insurance. Because you know what? That's going to have zero bearing on what they do. If anything, it's going to help with the ability to make some recommendations. So even in the case where maybe we're not competitive, I can look and say, look, here are some ways you might be able to change what you have and stay with who you have and not have to switch to us or switch to another carrier. Maybe here are some steps that you can take to stay with the company that you got.
Now, a common denominator in the conversation is saving money insurance.
Absolutely.
Is big dollar number differences, $200, $300, $400, $500 annually and stuff like that.
Yeah.
But if you break it down, say get the same coverage for $150 less a year.
You really have to ask the question if you're happy.
Some of us, well, no, actually, I mean, $150 a year is $150 a year. I'm the kind of guy that if I find a quarter in the parking lot, if I find four, I've got $1. If it's $1 I didn't have.
That's true, too.
So it doesn't necessarily have to be a word
amount
that doesn't exist, ginormous.
Right.
But every dollar counts.
Every dollar does count. So there's a couple things that you want to factor in. Is that price that you're getting now going to be the price that you're going to get at your next renewal? Has the company you've been with been pretty stable and seen minor increases versus a company who plays? There's two types of companies, and I'll say it real quickly because I have one other point I want to make. There's the rabbit, the tortoise and the hare. The tortoise is, I call them the regional companies like Cooperative Insurance and Conquer Group and Ohio Mutual. They don't play the rate game as aggressively. They're kind of slow and steady, and they'll get to the finish line and no problem. Then there's the hare, and I'm not going to name names there. But there's companies that I didn't name on the other side, so you can use your own imagination. They jump and they play the rate game. And it's going to be fantastic today, but they may have a realization that the actuaries have to make some changes. And now all of a sudden it's going to take a steep increase at the next renewal. So it's about having a conversation, finding the company that fits your needs and your budget. I know that's the cliche thing that we always say, but it's never more true than now. And the other thing too is if you are quoting, one of the reasons I want you to have your policy with you, make sure you're quoting the same deductibles. If you start quoting higher deductibles on your home or higher deductibles on your car, of course, whoever you're quoting with is going to be cheaper because they're no longer quoting apples to apples. Quote apples to apples as a baseline and work your way from there.
My takeaway on this is if you're satisfied, stay satisfied. Have the conversation with your current.
Yeah, and here's the thing, always remember that if you are with an agency, your agency has access to many carriers, including our agency. And if you're happy with your agency, stay with them. Have them just shop with the other carriers they have if you're happy with them before you start seeking options elsewhere.
Those shopping, get in touch with you how?
Oh, well, if you're shopping, well, I got all kinds of numbers. No, I'm kidding. You can give us a call, 748-5224. Find us on Portland Street in St. Johnsbury, online, thebarrettagency.com, Google, Facebook, and YouTube. Just look for Barrett Insurance Agency.
Mike, thanks for the educational lesson again. Good policies Tuesday mornings. Right here
you're
on
getting
Magic.
the date and time right on.
All right. Music for you now from Halsey.